go. The opinions and views expressed in this podcast are solely those of the Mortgage Dudes only, and not those of Equity Resources Incorporated or Greentree Mortgage Services. We're not crazy. Think of them as your slightly odd, yet occasionally hilarious uncles that are very knowledgeable about mortgages. I will say, together they have over 45 years of experience in the housing market, and that may or may not have included bourbon, beer, and cigars. They are here to enlighten and entertain, and we cannot be responsible for the language or jokes. So buckle up and be ready. Things are about to get interesting.
I went all in, because I have a Blackstone, and I use that a lot. But this pellet grill, I made like a pork butt and smoked it for like 8 hours, and it was fun.
Think of you and I think of the word butt, and it's just
big fat ass butt. Yeah. Hey, welcome to the Mortgage Dudes. I'm Shane Marzullo. This is my partner in crime, Ed Moloney. We are here to inform you, educate you, go over all kinds of good fun stuff like, investment homes, the new era. Now that we have a new president, what's it going to be like? The grant programs, and some other kind of new stuff like about student loans. So, Ed, let's just get it started with you, baby. The attitude and gratitude is put away in mothballs for the season.
Yeah. So as the season came to an end, I got 35 times on the attitude of gratitude compared to other years, 40, 45, 50. So a little bit less. June and July, we had lots of wind in Vineyard Sound. But we did a great event here. I did it the year before. This year, I had a person challenge me to do it a little earlier. So what I did was some posts on Facebook and some posts on LinkedIn. I have a good friend who served overseas for our country named Pete Hill. Pete goes to places where there's shelters for homeless veterans. And 2 years ago we did it, and I think we got 650 pairs of socks. This year we ended up with 1,302 pairs of socks, over 155 hats, and 30 pairs of gloves. And what happens is Pete takes these to the shelters, but then he also knows people living in the woods, to be very honest. It's sad, but it's true. And then we do ask for warm socks. Some people send not warm socks. So we're buckling those up and sending them to a base in North Carolina where the military base is helping families and everything else. It'll be part of their military mission. So we are thrilled. Next year, we're going to switch it up a bit, make it a little bit simpler. There's a company here where they give jackets. You buy one, and then one automatically goes to veterans. And when we were doing all this, people like Shane and others would Venmo me money, so you go shopping. And when I did, one of the stores that I shop at, a gentleman reached out to me and goes, next year, go every 2 weeks. I go, why? He goes, my wife's the general manager at the stores. I'll get you 30% off. So
That's
next
awesome.
year, we're going to leverage, maybe go more jackets and stuff. But it was just, people were saying, oh, you did a great job. I'm the conduit. Pete Hill's the inspiration, the people like Shane and others that donated I did get a plaque from my local state rep whose son had died in the military.
Oh, wow.
And he's a big military advocate. He calls the House of Representatives the People's House. He has a room where he actually invites people in, not like a lot of our freaking politicians, on both sides. So let's be clear.
Be nice, Ed. Be nice.
We got the flag and we got the fish, baby. The flag and the fish. No Democrat, no Republican. No, that's flag, fish. So that's kind of what we did. It's our way of giving back. People want to help. And I push everybody. Let's help our military, not just
so. Let me ask you with that, Ed, because that is a great thing that you do. Are they still hitting you with sales tax, or is there a way they do that, or do you get a nonprofit?
we could do that. He's not an official non-for-profit. It's a great question, and we'll work around other things. But for him,
is your sales tax real high? What is your sales tax?
It's like 6%. It's not.
Oh, yeah. So
it's on close. It's nothing on close. So no,
zero on close?
Because it's closed. Sorry. No sales tax.
Oh, no kidding.
Because it's closed. Now, if it was food that you were feeding your mouth and you would take me out for a burger, would you come here and I'd drink some beer? Then there's a sales tax, but not on close.
That's interesting. Yeah, that's actually a really cool thing. Yeah, we Ohio.
Sometime about Ohio tax versus Mass, because we are Taxachusetts. We just get you in 12 other ways.
Yeah, we have our, like, it depends on the county. Some might be a little higher, but it's generally a little over 6%. The only thing we're not taxed on is, like, if you get your food to go, as long as, that there's no tax, unless there's a soft drink or alcohol, then they tax it. Of course, Ohio being Ohio, we have our sin tax for, alcohol, and then our bigger sin tax for tobacco, even, and I get it for cigarettes or whatever, but damn, cigars, seriously, So what pisses me off,
I want to hear what your go-to reasonable cigar is, then your top 2 cigars.
Yeah.
You just go, wow, if my wife wanted to buy me a present, I'd have her buy me this cigar.
Well, it's funny. We talk about that. I've always said Undercrown's my absolute go-to. The Undercrown shade is one of my favorite. It's funny is like just as all around, if I just want a quick smoke, if I'm I don't want to really spend a lot of money on a good cigar because their Undercrowns they average anywhere between $8 to $10 a stick. So I'm like, I don't want to burn through all those. I generally believe it or not, Drew Estates, these factory smoked cigars for you get 25 of them for $35. And I get the 60 gauge, the bigger.
Oh, they are.
So, the big cigars, the man cigars, but I like those. And for $35, of course, then I get my stupid sin tax, which is another 12%. So of course in my mind, they're stealing 2 or 3 cigars out of my package for, that's how I think about my government with that. And then, there's some HC cigars I like. There's just a few I like. I think I tend to like the medium, the mellow cigars.
Yeah,
so
I'm a Connecticut wrapper, cigar.
Yeah. The Habano wrapper I've gotten into a little bit more. They're not bad. The problem with some of them, they get too dark. And, so then it's really heavy. I don't want to get a buzz off a cigar. I generally enjoy cigars. Like this past weekend, I got a pellet grill. Thank you, my sister company, Equity Resources, for my 15 years of service. That was a nice gift that they sent me. Something like, hey, get this and pick what you want. So I picked a pellet grill, and I really, truly, I went all in, because I have a Blackstone, and I use that a lot. But this pellet grill, I made a pork butt and smoked it for 8 hours, and it was fun.
Think of you and I think of the word butt, and it just
big fat ass butt. But no, and I made smoked mac and cheese. Oh, dude! It's a 2-hour cook for the mac and cheese. I just sat out there with a bourbon and a cigar while I was cooking. I'm like, holy shit, this is fun. Now I know what these guys like to sit there and cook all day. I'm like, I can do this.
It's like fishing in a dock, but it's getting too damn cold. But we should probably get into some of the things that people really give a shit about.
Yeah, well, they love us. They love us. Come on, they want to know. Because you know what? You don't know. Maybe you're like, Shane, I've been wanting to try a cigar. What's a good cigar to try? Well, okay, try with a mild cigar.
You definitely don't want to try your fat butt. I'll tell you that much. Okay, so Shane, we've talked before about buying a home with a friend or family, but let's narrow that down to investment properties. So everybody says wealth is in homes. I do not own any investment properties presently. I know you've discussed what others that you do. Why don't you go over the good, what you can get out of it, the bad, what you got to put into it, and then the ugly. Now I'll throw my insights from working with investors.
So, I mean, here's the thing about investment homes. You hear a lot of people talk about how great they are and everything, and they are, and I don't want everybody to think, because I have kind of my own opinion on them, but I think they're great. They're a great way to build net worth, if you're buying a single family home or buying a multi-unit home, where you're going to live in it or you're just not going to live in it and you have it all investment. It's a great stream of income. It's a great setup for retirement. It's almost like a 401k if you think about it, because if you're making, if you're netting, $4,000 to $1,000 a month just in income on that, that's a good stream of income, especially if you gain multiple properties and as you get older and build a larger portfolio of these homes, you're going to have a good net worth of income. You retire, maybe you just, putz around, take care of them, do whatever. Now, that's the great thing. You own it, or they're paying the money you're making from it is paying your mortgage. You're living basically rent free, more or less. Now let's talk about the bad. Well, it requires money down. You can't get into a home with no money down on an investment property. The bottom line is they're going to want 20 to 25% down. You're probably going to need reserves, and let me explain. I think Ed and I have used this terminology before. Reserves are basically X amount of months saved up, either in an investment account, something liquid that you have access to within, 24 hours or a week, that you can tap into to use to pay something such as, your house payments or repairs or whatever. So that's one thing that Fannie Mae and Freddie Mac look at. Sometimes they might want you to have 6 months reserves on your properties and that's reserves of your total house payment.
If you have 4 houses, it's on all of them.
Yeah. And including your own personal home. So the other thing is we got to look at is of the bad. You got to figure out who's going to fix your shit. I mean, are you going to be getting the call at 3 a.m. and they're saying, hey, my furnace is out. So then you have to figure out, who can fix this furnace right away? So you need to have a list of before you buy an investment property. If you're not a handy person that can't fix anything, then you need to have a list of saying, okay, I have a HVAC guy. I have a company that I know that does roofing repairs or drywall repairs or plumbing or electrical. You better have a list of people that you've called and maybe talked to and can trust, because you're going to need that. Stuff does go wrong. Don't count on your tenants. Look at you eating healthy. Good for you. Those aren't healthy. They're filled with chemicals. But anyway, you're going to need, a list for people to contact, because don't count on that tenant to do the work. Like, well, again, I'm speaking out of my own past history. I had a property and I'd get these guys like, I can do the work myself. Well, Hillbilly Bob, let me tell you, you can't fix plumbing with bubble gum, shoestring, and duct tape. So let's just have a professional do it and do it right. And that was the bad. Now, ugly. When things break, you have to pay those bills. So you have to have a savings. You're going to have money. because, plumbing breaks, the tenants break stuff. They don't give a crap about your property, or they do, or you do have some people who do care. Maybe you have to evict them. Well, you're going to either, and in Ohio is a little different. Might be different than your state. I don't know how Massachusetts is.
Very bad.
Yeah. See, in us, I can get your ass out in less than 30 days.
So let's stop right there. Every state is different. Our state's much more liberal and loving than your state. In our state, it's horrible. Meaning you could basically say, no, I'm not moving. And then it's got to go. And then, of course, it is not unusual to get someone to have 6 months to be able to get somebody out of a house.
Wow.
It is, especially during COVID, it was horrible. But even if not, they've got a kid, good luck. Good luck getting them out. Good luck. We are very difficult, us in Florida, unlike Ohio. So really, if you're going to think of an investment property, I love what Shane's saying, build up a reserve. Talk to a good mortgage person. Talk to some friends that have owned it. Talk to a good attorney to make sure that your escrows are held properly. Maybe not a big issue in your state.
Yep.
Huge issue in our state. Huge. And there's good, bad, and indifferent. Yes, you can buy a multifamily, owner-occupied, living in one portion for 5% down or FHA 3.5%. Is houses investment properties for everybody? No. Over the years, if I put money in with other guys to get them started and then got out, yes, I am not Andy. I have enough stress. I don't want it. But for some people, it's a phenomenal opportunity. And people are saying all the opportunities might be changing with our new presidency. Now, let's be clear. We like the American flag, and we like fish, and we like cigars. This is not about Democrat versus Republican versus the Whig Party. The president has been elected. It is done. Now it's, what do we think the effect will be? So what do we possibly expect? I'm going to tell you what I expect. I'm not saying I'm right, wrong, or otherwise. But I'm going to give a little bit of this. Before the election, mortgage bonds slowly weren't being bought. The appetite wasn't there. It's the first time in my lifetime that the betting apps had betting apps on the presidency. And they were all betting on Trump. I'll be honest.
I honestly didn't know that there was betting apps. And my friend's like, dude, Vegas bets on everything. I'm like, I know. I was like, oh, crap. I did not know that.
So I had talked to a couple of secondary guys that we know here and other places and said, why are the rates going up? Why aren't they buying bonds? And they said, well, I'm not going to send this to the entire company at XYZ or ours. But the reality is, if Trump gets in, the thought process is the economy will get better. When we really dumb down the simplicity, when stocks get better, people take money out of bonds, put it in stocks. When that happens, rates go up. A million things can affect that. Inflation, wars, everything. But the main principle is that. So we saw weeks before when the Fed changed the Fed rate, the mortgage rates kept going up. I believe the bond players said, we're not getting caught with our pants down. If he gets in, we're screwed. So we're slowly not going to buy as many. Rates went up. His first day in office, or not in office, but voted in, stock market went through and people pulled money out of bonds. Where are rates going to be? Here's the thought. I think the Fed has said, or the predictions on the Fed, they're going to drop Fed rate 5 times next year. As far as mortgage rates, we got, how's the economy going to do? Get this little thing that nobody has gotten their arms around. Inflation. We could spend half an hour on inflation. I'm not doing it. But the answer is, don't go by all the forecasts. If you went by the mortgage bankers forecast and National Association of Realtors, we were going to be in the 5s this year.
The so-called experts in their shit that say that drives me absolutely insane. Nobody knows.
Drives me. So here's what you got to do. These are the forecasts. You can read all the stuff. You got to get comfortable. The fact of the matter is, if rates come down, usually values and prices go up. Why? Because you got more people to buy the thing. It's that damn simple. Yep. So if you're in a position and you're thinking about buying an investment property and you talk to an expert and you got a team, then effing do it. And then if rates come down, you refinance.
Yep.
I'm not in the marry the house, date the rate, all that crap. It's all about what works for you. Now, if you're renting, and this is separate from the investment properties, but just buying, you know what? Rent is 100% interest. That's all I got to say. So if mortgage rates are at 8, 9, 7, 4, whatever the hell they are, you're paying 100%. So that's my take on the presidency.
Yep.
And again, the flag, we all should love our military. We should all love fish. We should all consider a cigar. If not, don't hold it against us that we do. Shane, your 2 cents on this, and then we'll go to baby.
Yeah. I tell you what, you can rub Ed's head like a magical spear to see the future, but all you're going to get is dandruff and fish gills. See, here's the thing. Nobody really truly knows. It's all about feelings. And Ed's right. A lot of times when your 401k is killing it, like, oh yeah, I'm making all kinds of money in my stocks, we're taking a beating on the mortgage rates. There are times where the stocks suck, but we do great. And then there's the great times where stocks are doing good and we're doing good because everybody's happy and lovely. Is inflation coming down? I don't know. I think I saw something on the news that was talking about the prices of stuff already coming down a bit. And I think they're projecting that inflation, it will be coming down with the release of certain regulations or however. Again, it's all warm and fuzzy feelings, but I think that's the biggest. We have that hurdle. And I think, a lot of people are like, well, I've been trying to buy a home for a year and a half or 2 years, Shane. And every time I go up for it, I put an offer in and I got 30 other people putting in offers in at the same time. And I get it. It's frustrating as hell. But the biggest problem we have is you have people who are at 2 or 3% right now. And for them to say, hey, I want to move into a small, maybe, like, hey, we're retired, but I want to go into a smaller home. And the fact of the matter is, for them to go to a smaller home, it might cost them the same what they're paying right now with the new rates and at a lower price home with putting a bunch of money down. So there's no benefit for them to move. Now, they don't want to pay a 6% or 7% or whatever, So I think as rates start coming down, you're going to start seeing people going, okay, you know what? Rates are in the 5s. Rates are in the 4s. I'm going to do something now. I want to sell my house. So it's going to be good. Go ahead, Ed. Yeah.
I'm going to challenge you that let's be careful of rates in the 5s and 4s. I got people that we're getting back to the 3s. I don't think we're ever seeing that. I think there's a small chance we're going to see the 4s. Do I think somewhere in the 5s? Yes. I think we're also missing something on the inventory. You hit it. People are going to stay where they are. People are looking and going, okay, but as we get closer to a 5, maybe some move. The inventory that's out there, at least in my marketplace, this kind of jumps down past a couple of things we were going to talk about, but it's from people dying. Let's be blunt. Our baby boomers are living to longer ages, but they're getting there. And as people retiring and moving out of Massachusetts, that's very expensive. As far as the market, I think we're kind of hitting on that now, is inventory is different in each place. Here in Mass, we've seen more inventory come on, and I expected it to be eaten up by the pent-up demand that we hear. And I believe the pent-up demand's there. I believe it hid due to the election. I believe some of it's hiding the demand, the younger buyers. We're seeing companies say, you got to go back to the office. Well, if you live in Massachusetts, to get into Boston, there's no effing good way. So are some of those people saying, maybe I'm going to move to Texas or Atlanta or Columbus because it's easier ways. We don't know on inventory. Do I think it's going to improve? Yes. As rates even move steadier or go down, but get ready, prices are going to go up. We're going to talk in another one more again about how to buy with friends and family. But I think Freddie and Fannie, there's a big grant program going on. And there are, let me be clear, There are down payment assistance programs everywhere, but not all of them have money. Like we have Housing Authority Corp on Cape Cod, but it never has any money.
Do they burn through that real quick when they do that?
It's just a local little agency.
Toledo has one, and they do that too. I'm not a fan.
I'm a big believer for down payment. If you're buying a $300,000 house, 3%, in most cases you get Home Possible or Home Ready, depending on your income. That 3% can come. Start saving your tax refunds. Start letting Grandpa Shane, because he's a grandpa, know that your granddaughter really wants a house. And
it's a grandson, by the way, buddy.
Grandson, granddaughter, whatever. I don't know what you got.
Yeah, I'm not.
You might have another one.
I only have one. He's a grand boy, and he's awesome looking, and he's cute, and
he obviously looks like your wife. Then.
He does. He looks a little like his grandpa. Anyway,
So the point is the down payment assistance. We're going to get into Fannie and Freddie. We're offering some programs. They're coming to an end. Who knows if they'll get extended? I'm throwing the line to
you know what? Thank you, Ed. So both Fannie and Freddie have a $2,500 program, which is really nice. That means you don't pay it back. This program, you're not paying it back. So if you buy the home, you get it, and 6 months later rates drop and you want to refinance, great. You're okay doing that. There's no problem with that. You don't have to pay that back. The 2,500 is based on your income has to be under 50% of the median income. And you might be going, okay, well, what's the median income? Well, or is it 50% of the 80%?
Yeah,
I think it's 50% of the 80%. What we're saying is this, every county or certain area, Fannie Mae and Freddie Mac have a thing about the average median income in that area. So I'll give, for example, Ohio, or let's say Lucas County or Wood County is a little over $70,000. So if you're making less than $35,000, you would qualify for $2,500. That money can be used for towards a down payment, or it could be used towards your closing costs. It's your money to use, however. So that's a great program. There is education you have to do. And honestly, if you're a first-time home buyer, I don't think it's unheard of to do this education, because it's good. They teach you things and it helps you, especially for, with Fannie Mae and Freddie Mac. The next one, now that one, the 2,500, it ends in February. Just say if you don't close by the 1st of February, then you're probably not going to get that 2,500.
And we don't know with new administration what will change, what won't. But the down payment,
maybe they'll increase it. They might say, hey, we're going to extend it. We don't know, but let's assume that they're not right now. Assume the worst case scenario. The next one is Freddie has, which I really like, and we've done quite a few of these, believe it or not, is a $1,250. And that basically means hey, your income is over the 50% median, but it's still within the median income. You can, you can qualify for this, and it's $1,250. Hey, if you found $1,250 on the ground, are you going to pick it up? Hell yeah, you're going to pick it up. So it's a great way. What is the worst outcome you have to do? Education course. Ooh, sorry, I put you through that pain of being educated. For $1,250, you're going to spend an hour of your life. I mean, hell, that's well worth it. I mean, if someone says, hey, Shane, I'll pay you $1,250 to spend an hour fishing with Ed, hell yeah, I'd probably do it. I'd probably want more money. I'd actually want more money.
Beer.
Yeah.
The background noise here is I have neighbors on either side, and we are a dog-loving place. So you might hear some dogs in the background, probably better than hearing my voice.
He's got a dog. You got a puppy farm? You running a puppy farm over there?
Dude, I have a horse farm, and I'm going to send you one for Christmas.
Send me a box of horse manure.
What I put up with every day I talk to you. Okay.
Hey, let me ask you, I do want to ask you on a side note, on the horse shit. Do you put it all in a giant pile? And
we have a dumpster. They come and take it.
So I have a client that they literally had a horse farm next to them, and they would just dump it in this big giant pile and just sit there. And the client would actually take the client. They're like, yeah, you can have that. She'd use that for manure and for. Yeah. I mean, she's like, it's the most richest dirt you'll get.
Oh, it's incredible. You're better with pigs, but
you can't do that back in Mass.
No, you got to be able to turn it over and stuff. And where we are, we're too close to other homes, so we have to get it off the property. You need to have a lot of acreage.
You think farmers would buy that shit from you?
No, not the horse.
No pun intended, but that was funny.
Yeah, you're funny. Poor your wife. Okay, yeah. Loan Sense. So Loan Sense is a new program that's come out, and it's helping people basically, if they qualify, they get into this program, they look at all of their student loans and show them ways to get them combined or reduced. Some people are doing this on their own. Can you speak a little bit more to it?
Yeah, from what I understand is if you have student loans, let's say you have a bunch of student loans, and in lending, you might not have to. Maybe you're on the income-based repayment program, or maybe you're on maybe they're deferred. Well, we still have to, if the program says you have the IBR says your payment is 0, we still have to count at least 0.5% or a full percent of that balance.
Which is usually worse than what the real payment is.
Yeah. So we have to factor that in. Well, this program says, hey, you can actually, we can actually look at all your loans. They'll look at consolidating them, coming up with a payment option and where it's more affordable, and which possibly gives you the ability to one, qualify for a home, or maybe even qualify for more of a home, because now that payment is lower. They're consolidating instead of you having 10 student loans, now it's one big loan and it's a set payment for X amount of years and everything. It's a great program for you. Again, it's not a one size fits all. Like Ed and I will never fit in a one size fits all, but there's certain things that do. Mostly me. I know, Ed, you're a lot thinner than I am.
193 pounds, baby. The big muscles.
Just my thigh is 190. But no, it is a good, is it going to help everybody? No. But is it going to help a fairly good amount of people? Yeah. And if its ability for you to save money, afford, maybe get a little bit more for a home. People are like, well, what big deal? Let's say I qualify for, it gives me $200 more towards a house payment. Well, let's just look in the world of kind of math. Basically, every $10,000 you go up or down is about $60 to your payment. So let's say your house payments, you're eligible for $200 more a month or a house payment. Okay. Well, that's what, 60, 20, 180, that's 30,000. Basically that's almost, $35,000 more. So if you look about that
markets is the difference of A house to C house.
Oh my God, it's huge. I mean, you look at 150 to 180, it's a total different home. So
I can't get a house this big here for 180.
I know. Well, this is Ohio price. Some of Ohio prices. We're not all on waterfront property and happy land.
I have a horse shit. It's not on the waterfront. So I think today, hopefully our viewers got the following: investment properties, the pieces, the new presidency, and what it may or may not do. That if you're ready to buy, be an investment or a primary, do it now. Yep. Never a bad time, because over the lifetime it'll be there. This Loan Sense program's great. My parting shot is with time and a plan. Anyone can own a home. Reach out to me or Shane. And what if I live in California? Great. We'll still educate you, and then we'll try to find you somebody in California.
Yeah.
We license there now. but we're here to give of our gifts.
We have a good network of people that
most of them are now. Some are, but most of them aren't.
Yeah, like our.
We got a guy in Texas.
Thank God he doesn't listen.
Yeah, so that's my parting shot. What's yours? I want to get out and go do some climbing.
I'll tell you what. You know what? My parting shot is this: family. You know what? Election crap is all over with. There's no reason to talk about it to your family. You have your views. They have their views. You're not going to change it. Just be happier with your family. Be happy with the ones you are loving that are doing, are going to, hug you no matter what you think, what you do. And if you're talking to that family and you hear them say, hey, I'd love to buy a home. Tell them what? We know a couple guys you can talk to. They're great looking guys. One much better than the other. This guy, and they're friendly and they'll help you and they'll assist you into buying a home. We'll set you up with good realtors. We can, we'll guide you every step of the way. It's not here you go. Here's your numbers. Go. We don't want people to be upset with us. We want everything in a good pattern. So that's my parting shot. Everybody have a great day. Oh, one more thing. Subscribe. Right, Ed? Right?
Yes.
Subscribe. Let us know you subscribed either on Facebook, or not Facebook, YouTube TV, or YouTube. Whatever you listen to podcasts on, whatever platform you're listening on podcasts, that's what I want you to do. Just hit that little button. Bing. You'll be updated when we post a new show. And here's a good thing. Let us know you did. We'll enter you in for a free cool mortgage dues. I am so screwed up. It's almost. Okay, let me answer this. It's a nice, cool shirt.
Mortgage dudes at callequity.net or call 774-573-0329 or text to that no bad pictures because Shane already does that. Shane, I'm glad you can't speak. Go hit a golf ball. Everybody.
I am going to go smack the shit out of some. All right. Have a good one, buddy.